Hi there, good morning. It's another wonderful day. Time to talk business. I would want to ask how your day was, but it's time to look at the varying features in the business world. And my name is Blyden Okim. Thank you for joining Spectrum TV on Business 360. In today's edition of Business 360, we'll be looking at the big stories making rounds in the world of business, talking about hedge funds and the US dollars. Hedge funds have turned bearish on the dollar for the first time in a year, in a wager the US currency's best days may be over. Leveraged investors flipped to a net short position on the greenback versus a basket of 8 major pairs last week. The first bearish shift since last August, according to data from the Commodity Futures Trading Commission. Hedge funds had been some of the biggest champions of the dollar this year, due to a hawkish Federal Reserve and concern over slowing global growth. Sentiments may be shifting as signs emerge that aggressive Fed interest rate hikes may finally be cooling the quickest US inflation in 4 decades. In recent times, we've heard that the US inflation rate is slowing down and is beginning to add up the numbers for other countries, but I do not think it's the case with some African countries. But talking about businesses, profits are often guaranteed or viewed over people. Federal safety inspectors find 3 more Dollar General stores habitually disregarding workplace safety, risking employees' lives. When federal workplace safety inspectors visited 3 Dollar General stores in Georgia earlier this year, they found exit routes obstructed, boxes of merchandise stacked unsafely, and electrical panels hard to access, violations often cited at Dollar General locations. The U.S. Department of Labor Occupational Safety and Health Administration has proposed more than $6.5 million in penalties after 78 inspections at Dollar General locations nationwide, including more than $450,000 in penalties as a result of 3 inspections in Georgia since 2017. OSHA inspectors frequently find unsafe conditions that put workers at risk, and that could lead to disaster for employees and customers in an emergency. Well, it's a story at many workplaces, particularly could be in Africa. What are the measures we put in place to make sure that humans are safe while at work? It could be a big concern. But the good thing is the US regulatory body are doing their bit to put control and measures, making sure that safety are adhered to. And in business, the German households will have to pay hundreds of pounds more a year for gas on the levy to help energy companies cover the cost of replacing Russian supplies. Before the Ukraine war, Germany imported more than half its gas from Russia, and Germany already has amongst the highest household gas bills in Europe. The government said the move was necessary to prevent the collapse of the German energy market. According to the minister, he said that they've been promised the levy, which will be imposed from 1st October and remain in place until April 2024, and will be accompanied by additional support for households. Gas prices have soared since the invasion of Ukraine, as Western countries impose sanctions and pledge to phase out Russian imports. It's difficult for Germans because now Russia has said they're not giving them further supplies of gas. And you could imagine they have to rally around to get that gas, and prices are definitely going to go up. In business and business outlook, the numbers matter. UK labor market shows signs of cooling. The unemployment rates in the UK was at 3.8% in the second quarter as expected. The number of people in employment increased by 160,000, less than market expectations of 256,000 gain. The number of job vacancies fell for the first time since August 2020, and growth in regular pay, which excludes bonuses, fell by 3% when adjusted for inflation, the biggest drop since records began in 2001. So looking at the numbers, according to Malaysia's minister, talking about the finance minister, the fourth quarter will be the challenge for Malaysia's economy if global headwinds such as Russia's war on Ukraine and China's zero-COVID policy persist, said the finance minister Zafrul Aziz. China is Malaysia's biggest trading partner, and disruption to supply chains and trade will dampen some of the growth expectations in the fourth quarter of this year for Malaysia. Growth momentum for July to September should be strong, but this could be the result of a negative base effect from the same time in the previous year, said Zafrus. Malaysia's gross domestic products contracted in the third quarter of 2021 by 4.5% as a result of a slowdown in all major economic sectors, mainly the manufacturing and services industries, the Department of Statistics Malaysia reported. On Friday, Malaysia's central bank announced that the country's economy grew by 8.9% in April to June from a year earlier, and there are fears there could be a recurrence of the same situation some years back. Still looking at the numbers, we'll move to Asia. Qatar's economic index inflation rate is at 5%. Annual inflation rate in Qatar is slightly lower to 4.98% in July of 2022 from 5.41% in June, but remain well above levels of past decade. Inflation is the rate of increase in prices over a given period of time. The main upward pressure came from cost of recreation and culture at 32.4%, housing and utilities 6%, food and beverages 4.2%, restaurants and hotel 2.2%, furniture and household equipment 1.5%, clothing and footwear 0.6%, education 0.3%, and miscellaneous goods and services 0.1%. On the other hand, prices of transport fell slightly at a negative 0.1%, and health costs declined 3.4%. When compared to previous month, the Consumer Price Index (CPI) went up 0.5%. At this point, we'll go on a short break. When we return, we will be looking at gold futures amid declining prices, as well as the stock market report. Don't go anywhere. Thank you for staying tuned. It's Business 360, and my name is Blyden Okem. We'll be looking at gold and how the prices hold amid declines on rate hike worries. Gold prices traded around $1,780 an ounce in today's market after falling 1.3% in the previous session, weighed down by expectations that the Federal Reserve will continue to aggressively raise interest rates despite signs of easing inflation and slowing growth. In the latest central bank commentary, Richmond Fed Bank President Thomas Barkin said on Friday that the Fed will have to continue to move rates into restrictive territory until he sees inflation sustainably falling within the target range for a significant period. While gold is seen as a hedge against inflation and economic uncertainties, higher interest rates raise the cost of holding non-yielding bullion, talking about gold. But while talking about gold, other metals are doing quite well in the market, and it would be a good opportunity to see what the metal market is saying in the London market. Talking about the London session, let's have a quick look at the metal market. Well, after having this great look at the metal market, we'll also have a view at what the energy cost is and agricultural market outlook. But the metal market, here we go. The metal market in the day's price and percentage change indicates gold market. That gold at current price now is at $1,775 per ounce, a 3.67% point decline and a 0.21% drop, not quite huge. Looking at the market, not totally volatile, but basic drops taking place, and it's affecting silver too. Silver is having a simple drop of 0.204 points drop at $20.06 per ounce at a percentage drop of 0.96%. Copper, another metal dropping in today's market, and steel seem to be on the increase, but not reasonably, no points added, at $4,142 per ton. Iron ore dropping, lithium slightly upward, platinum slightly upward, platinum is on the downside too, at 7.34 points drop, a 0.79% drop, and titanium current price at 11, no reasonable change. The market is relatively still early because we might expect changes moving to the US New York market rather. The London market comes, and immediately around 2 p.m. we'll be having the New York market, which most often changes the direction of the market. Let's also have a quick outlook of the agricultural market. What is happening in the agricultural market as well as the energy market. Looking at the agricultural market, market index shows a decline in soybeans at current price $1,471 per bushel, and a drop of 23 points, not huge, but 1.54% drop in today's market. And wheat reasonably down too, at current price of $790.22 per bushel, a reasonable drop of 10.53 points. It's a 1.31% drop. Lumber seems to be going up in today's market, looking at an 83 Malaysian ringgit per ton, and it's hitting 58 points increase in today's market. And looking at the businesses of milk, doing quite well, reasonably not much anyway. The market isn't that volatile, but rubber, orange juice, coffee, canola, sugar, all dropping in today's market. The agricultural market seems a bit fair. On one side is moving upward and the other side moving downward. They say whatever goes down comes down. But on the other hand, the market also often shows that when it goes down, there's always a need to go up. A quick look at the energy market to add and cap up the analysis of today's market. The energy market talking about crude oil, Brent crude, and their performances. Crude oil is falling in this morning's market, current price $89.02 per barrel, and it's dropping at 0.411. Market is changing at a quick pace, and a percentage drop of 0.46%. Bore 7 per barrel, a drop of 0.751 points, and a 0.79% drop. From yesterday to this morning, oil prices had dropped by 5%, a huge drop yesterday, and is beginning to stabilize in today's morning market. Nobody really knows what might happen when the New York market opens around 2:30, 1:30. Also on the negative, natural gas seems to be up, affecting countries like the UK and what they're going through in need of natural gas. The cost and the prices are going up relatively. Coal, it's on the downward side, talking about the energy market. You could see the UK gas still going higher and higher, and UK citizens are complaining about the cost based on what is happening. But that would be the high points of today's market, talking about the commodity market, which involves the metal market, agricultural market, energy market. But we'll make a quick switch and we'll be looking at what is happening in the United States pertaining to Africa and African country corruption in line. The United States has sanctioned senior Liberian government officials Nathaniel McGill, Sema Serenius Hefus, and Bill Twewe for their involvement in ongoing public corruption in Liberia, according to the U.S. Treasury Department. McGill is Liberia's Minister of State for Presidential Affairs and Chief of Staff to President George Weah. Cephus is the current Solicitor General and Chief Prosecutor of Liberia, and Twewe is the current Managing Director of the National Port Authority, NPA. Through their corruption, these officials have undermined democracy in Liberia for their own personal benefit. Treasury's designation today demonstrates that the United States remain committed to holding corrupt leaders or actors accountable and to continue in the support of the Liberian people. Following the actions by the U.S., reports for control of U.S. persons must be blocked and reported to the Treasury Department's Office of Foreign Asset Control, OFSC. In addition, persons who engage in certain transactions with the designated individuals risk also being exposed to sanctions or subject to enforcement action, according to the Treasury. Well, we'll have a quick look at Nigeria's economy. Inflation in Nigeria hits a highest level in 17 years. Annual inflation rate in Nigeria increased to 19.64% in July of 2020, the highest since September of 2005, from 18.6% in June, with a weakening naira continuing to pressure the cost of imports upward. Inflation is the rate of increase in prices over a given period of time. According to data from the National Bureau of Statistics, NBS, food inflation in Nigeria, yam and other tubers, meat, fish, oil, and fat. Other upward pressure came from gas, liquid fuel, solid fuel, passenger transport by road and by air, garments, cleaning, repair, and hire of clothing. When compared to the previous month, the Consumer Price Index (CPI) went up 1.82%. Still in Nigeria, there is a report from the World Bank that says Nigeria's job crisis is far worse than what the unemployment rate shows. Well, many people would agree with them. This has led to an increased pressure on young Nigerians to migrate in search of gainful employment overseas, resulting in an increase in the share of refugees and asylum seekers from Nigeria over the last number of international migrants from Nigeria in 2019. Increasingly, educated Nigerians are struggling to find employment opportunities in the country, while unemployment rates have increased substantially for Nigerians across all education levels over the years. It has become a progressively challenging situation for educated Nigerians to find employment opportunities. The report captured Zenith Bank was among the top gainers as investors lost 18.6 billion naira. The Nigerian stock market resumed trading this week. The market capitalization dropping was a negative 0.06% on Monday, which will be setting a pace for what might happen in today's market. This brought down the equity capitalization by 18.6 billion naira from 26.78 trillion naira posted last Friday to 26.76 trillion on Monday. Similarly, the all-share index crashed from 49,664.07 points to 49,629.43 points after 8 massive hours of trading. Neymar led the gainers charts, with 18 kobo to rise from 1 naira 40 kobo to 1 naira 53 kobo per share. Presco topped the losers table after sharing 15 naira 80 kobo to drop from 158 naira 40 kobo to 142 naira 60 kobo per share. E-Transact led the day's trading with 52.55 million shares valued at 119.83 million naira. This is where we cap it all and call it a day on Business 360 till we come your way tomorrow. Don't go anywhere. My name was Blyden Ukem and still remains Blyden Ukem talking business with you. Don't go anywhere. News at 12 is coming next.